What is up, YouTube? Coin Whisperer here, and in this one we're going to be talking about day trading versus hodling. I'm going to give you the pros and cons of both. And at the end, I'm going to give you my suggestion on what I think is the best strategy for increasing your cryptocurrency portfolios, I guess you can say. Yeah, let's get into this. And first off, as always, this is not financial advice. It's just my opinion. So do your own research, make your bets based on your own opinion. I'm just here to give you my 2 cents. So let's look at the pros and cons of day trading. So one pro of day trading is there's possibilities of high reward. If you're a good day trader and you can make 10-15% on each of your trades and you're making 2-3 trades a week, you're gonna be making a lot of money. There's no way around that. That'd be insane. But unfortunately, not barely any people can do that. That's a very select few people that are able to do that kind of stuff. So what's another pro of day trading? Well, crypto is very volatile. So you can see swings of 15, 20, 30, sometimes even 60, 70% in a day. So this is also could be a con, but I put it in the pros list because if you time this right, you can almost double your money in one day off of one single trade. So now let's look at the cons of day trading. Well, this ties back into crypto being very volatile, but you can lose your money just as quickly as you make any of your money. So if you make a few bad trades in a week, then all those gains you made the week prior are just going to be diminished, and you can even come up with less than what you had. And a big reason for this is overtrading. This is the second con. Overtrading is just forcing trades because some people just kind of think they have to make a trade that day, or they have to always be doing something with their portfolio, which is just not true. And they do trades that they know they shouldn't really be doing, or they just are really eager to make a trade, so they kind of just force it and they end up losing money in the long run. And another thing with day trading, I have some personal experience with this, is it is very time consuming. It can take 6 to 8 hours a day if you really want to stay on top of the markets and just you have to always stay one step ahead of the markets and know exactly what's going on with a majority of the coins out there if you want to be profitable day trading. And personally, when I was doing some day trading in cryptocurrencies, so over the summer I had an internship and I had to wake up at 6:30 every morning. And usually I try to make it to bed by about midnight, but when I was day trading, that never happened because you would just be so obsessed with what's happening with each of your trades that it was really hard to sleep. I'd wake up in the middle of the night a lot of the time. Sometimes I wouldn't go to bed till like 2:30, and then wake up in the middle of the night at like 4 and barely get 4 hours of sleep for my internship the next day. So yeah, it was just really wasn't great. It's hard not to be constantly thinking about your trades if you're day trading because it's your money. It's sitting there and you always have to be on top of everything. And this little picture kind of shows the difference between hodling and trading. So trading, you can have these big, let me find a better one, a big peak and then lose a lot of money for a long time, then make it come back up, and kind of lose it, stay steady, lose it again, then make it all back and more. But it's kind of the joke. If you just hodled, you would have done exactly the same thing without having to go through all these difficulties. So yeah, now let's look at hodling. If you don't know what hodling is, it stands for holding on for dear life. It's basically just buying a coin and not selling it for months to years at a time. So what are the pros of hodling? Well, it's easier than day trading one because you just have to look at one or a few coins that you really like and just do your research on those coins and buy those coins and just stay on top of them. So it takes some time when you're picking the coins, but once you pick your coins, just staying on top of them takes maybe like a few hours a week, if that, just to kind of just keep up with what the team's doing. And also, you can still make great gains hodling. It's some people kind of think you have to be constantly trading to be making great gains, which is just not true. If you would have bought Ethereum at the beginning of the year, I'm sure you'd be happy right now, making it started about like $8 at the beginning of the year. And it's now selling around like 300-ish. So yeah, you can definitely make good money hodling. So what are some cons of hodling? Well, your money's locked up for a long period of time. So if you decide to buy a coin and you tell yourself you're not going to sell it for a year or two, there's some opportunity cost for that, because if a coin doesn't perform as well as you expected, then you're gonna lose out on some potential gains that you could have been making with other coins. And also, you can lose a lot of money hodling if you buy at the wrong time and you decide to just hold, and it starts going down. You think it's gonna go up, but it just keeps going down. You can lose half your money you started with, even more, like 3/4 of your money. I one time heard a story of somebody going from $100,000 to like $50,000 in 2 months. So yeah, it's pretty crazy. And if you have some time, I would definitely pause this video and look at this little graph. It's pretty funny, kind of making fun of hodlers. So what is better? So personally, I kind of lean towards hodling. I think it's a little safer. If you're picking good coins that you've done a lot of research on, then it's definitely a lot safer than day trading, making a few trades a week, where you don't really have enough time to know exactly what's going on with the coins. But I also do like to do a little bit of day trading. So what I do is I keep about 70% of my portfolio in hodl coins, I guess you can say, the coins that I really believe in. And I just find good entry points and buy the coin and just put it in a wallet and forget about it, I guess you could say. I still keep on top of everything the team's doing and stuff like that, just to make sure that, everything's running smoothly and I'm not going to get screwed out of my money. But other than that, yeah, you kind of just keep it and set it and forget about it. But I also like to keep about 30% of my portfolio in liquid BTC, just in case I see a coin that maybe had a huge dump and I can just scoop it up on the low and make my money back pretty fast. Or just if I see a coin that I really like and it's just all the fundamentals are good, then I'll try to pick it up at a low point and maybe sell it for 20, 15, 30% gains if I can. That's always the goal. But yeah, so I definitely think you should mix it up. You shouldn't just do one or the other. It's always good to have some liquid BTC in case of these big dumps that happen in crypto. They're inevitable. They've been happening ever since I've got it in. Every month, there's at least like a few days where there's just these huge like 20, 30% loss days followed by 15, 20, 30% gain days. So yeah, it's always good to have that liquid BTC. So yeah, if you made it this far, leave a like. If you liked the video, subscribe. I'll be doing daily uploads like this for the next 90 days. That's my goal. And yeah, if you have any constructive criticism to give me, just leave it down in the comment section below and let's have a little conversation. All right, guys. Thanks. Peace.